Hi, I'm Liz McCoy, and I'm here at RBSK Partners, and I am joined today by Nick Wallpe. And today we're going to be talking just a little bit about actually a really popular topic right now out there on social media, talking about Venmo, PayPal, other third-party applications that have made a reporting change that went into effect on January 1st of 2022. So with that, I was hoping to sit down with Nick and just grab a couple of minutes with him, have him explain some of the differences between like the fact and the fiction of what we're all hearing, what we're all seeing out there on social media. I'm sure it's confusing, it was to me. So with that, if you guys don't know Nick yet, or just to kind of introduce him a little bit, Nick is actually our partner in charge at our Columbus office location. And Nick specializes in everything from accounting to audits to payroll services, bookkeeping services, tax preparation. And I knew that when I wanted to sit down with one of our partners here and talk about what these reporting changes really mean to people, I knew that Nick was going to be the right guy for that. So I guess I will turn it over to you and just kind of say what's going on with these changes.
Yeah, thanks, Liz. To start off, what everybody needs to realize here that what we're talking about isn't a tax change. So year over year, your taxes aren't changing based on this requirement. It's just strictly a reporting change requirement for these companies to the IRS.
Okay, so it sounds like if it's just a reporting change and not a tax change, then maybe it's not quite as scary as maybe what we've heard out there.
Yeah, correct. Really, I think that the tax reporting changes that will be done with the IRS to keep track of these transactions made through these apps to basically make sure there isn't underreporting. Ultimately, if you're self-employed, you should have already been paying the taxes on your total income, regardless whether you received them through the apps or cash or how you received the money.
What about those people that it's not a business transaction, but they are still earning more than $600? If it's not a tax change, what does it mean like reporting wise for this year?
Now the third-party companies like Venmo will issue a 1099-K going forward for each year that over $600 is earned for business transactions for goods and services. So we'll bring this up, but the business versus personal will be really important as we discuss a lot of this. 1099-K will could possibly include taxable and non-taxable transactions if the apps aren't used properly.
Okay.
So particularly if you use business and personal transactions for the app. So if you're someone that uses the apps for business and personal, we would recommend that you separate that activity and have a business and side and a personal side. That way when activity's done, you can designate what's business and what's personal, and it'll be easier for you to track what's taxable and what's not. And then the 1099 can be issued correctly based on the business activity.
Sounds like your recommendation is even completely across the board, that even on apps, that if you have a business, do things under the business, and if you're doing it personal, do it under the personal. Is that right?
I agree.
Okay. So I guess with that, what's maybe the biggest piece of fiction that you've seen out there on this subject already?
Okay. Yeah, one of the biggest pieces of fiction we see a lot of people talk about is the IRS is going to be tracking their money and who receives them from friends and family and vice versa. One example would be a parent sending money to their kid to college through Venmo or one of these apps to pay rent or groceries. Another common one is reimbursing someone you had lunch with for your personal activities. So the IRS isn't going to be tracking these personal activities and taxing you on them. You'll probably come to see that friends and family way to designate those transactions within these apps so that they're designated as personal activities.
Okay, so it sounds like the IRS is basically not going to be watching my every move and seeing and tracking and then trying to tax what I'm doing with like my friends and my family.
Yeah, that is correct. They're not going to definitely look at every individual transaction in Venmo or PayPal to know what's going on. They'll just be getting information from these places of the activity for the year. So you'll just want to make sure that you designate what's personal and what's business going forward. You're going to want to keep good records to make sure of your purchases and expenses related to these business activities, and even have good documentation of what was business and personal from your side so that you can properly report the taxes.
What you're suggesting, again, kind of is just to make sure that you have that you're keeping track of your information. I'm sure most business owners already know that they need to keep good records, but whether you're using that Venmo account for personal records or for personal expenses, or business expenses to keep track of your records and your payments, so that if at the end of the year you had to prove what something was, that you could go back and do that. Is that right?
Yes, most definitely. So yeah, you definitely want to make sure you keep track of what's business and what's personal, and within the apps, doing that correctly will lead to correct 1099 reporting. Another fiction item, as you want to call it, asking us about Facebook Marketplace or other yard sale type items, that how's that affect them tax wise. So a good example is you buy a new TV for $700. You use it for a couple years and decide to upgrade and buy a new TV. So then you get on Facebook Marketplace and sell the old one for $300. And then you collect the money through Venmo. And in those situations, that's just the sale of a personal asset. You sold it at a loss. So that would be related personal. No 1099 would be required for that, and no tax would be due on that transaction either.
I guess my kind of follow-up question to that would be, what about those people that have like a side hustle where they're maybe selling goods and services, whether they're like hand making their own goods and then selling them on like Facebook Marketplace and then collecting payment, or they're just buying someone else's product and selling it on different sites and then collecting payment through Venmo. What happens to those people if they haven't already been self-reporting that income that they earned through these apps?
Yeah, this may affect them with what would end up being taxable for them. Okay. So even before this, that activity would be taxable income. Okay. The only change is now they're going to get a form showing some of their sales if it's over $600, and the IRS will have copies of that too. So if you're doing your side gig or your side hustle and using Venmo or a different activity, and you are reporting all your sales currently from those activities, and nothing will change. The only thing will change, you'll get a piece of mail at the end of next year showing your amount of sales, which you would probably already have included on your tax return. So at the end of the day, your tax return will have in theory, no difference from the prior year.
As long as you were doing it correctly.
As long as you were doing what you're supposed to in the prior year, yes.
Okay, so it sounds like maybe for those people that weren't doing it properly before, this will kind of help close the gap maybe on the people that weren't self-reporting.
That is correct. There could be some instances if you weren't properly reporting your business sales in the past where this could affect you, but in that instance, you were doing it wrong in the past.
Right, you were doing it wrong anyway, so you should correct it, it sounds like.
Yes.
Okay. Well, so I know that we ran through kind of the fact and the fiction pretty quickly there, but what I'll do is I will actually throw a link under this video where you can go onto our website and just view the quick list of everything that Nick gave us and the rundown of that. And then if you have any additional questions, feel free to reach out. I will put our email underneath the video as well so that you can just send us a quick question if you have one. And I definitely want to make sure that I take some time to thank Nick for sitting here with me. Tax season is, of course, our busiest season here at RBSK Partners. So him taking just a couple minutes here to sit down and answer questions was really great. I appreciate it. And if we, I hope we answered all of your questions too. So again, let us know if we didn't. And yeah, that's about it. So thank you guys so much for watching, and thanks again, Nick.
Thanks. Have a good day.